Hi everyone, and welcome to this morning's webinar. Slightly earlier than we normally start. I just want to check that everyone can hear me. Can you hear me, John? Fine. David can hear me, so I'm assuming everyone else can as well. It's only when there's a problem with David's audio that we have a problem. Anyway, welcome, and as I said, slightly earlier start, and we've actually changed everything as you would have seen from the email that you've got. We're now going to focus all our webinars on a Thursday because it allows us to have a kind of a sense of continuity with what we're looking at in this session. We'll see if that carries through to the New York session, and we actually finish up with a final session late this afternoon when we look at the indices and commodities. Anyway, before we kick off, as usual, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, this can be a very, very risky business, so please don't even think of using money that you cannot afford to lose. I see down in the list of attendees, we've got quite a few new people joining us, so you're very welcome, and I hope you will enjoy the session that David and I will be putting together for you. And this is us, this is myself and David, and in this session, what we focus on is the principles of volume price analysis and the quantum trading tools that he and I have developed over a number of years. Volume price analysis is the methodology that he and I have used for as long as we have started in trading and investing for our own account. We were introduced to it really purely by accident, and it's a methodology that, as I said, in those days it was called volume spread analysis, but in the years that we've used it, we've applied it, we have now developed it. We believe we've taken it on to another level, as it were, and it's a methodology that encompasses different concepts: price action, volume, obviously, but candles, candle patterns, support and resistance, and time. And time is something that I really want to talk about in this session, not only time in terms of time frame, the time frames that you're looking to use when you're trading, but also in the sense of timing and why timing is so important. And please don't be put off by comments that you may have come across saying it's not possible to time the market. Every single trader and investor, whether it's a retail trader or a fund manager, attempts to time the market in some way or another. And it doesn't mean you have to be absolutely pinpoint accurate, to find those reversals, to buy when everyone else is selling and sell when everyone else is buying. But don't, as I said, don't be put off by saying it's not possible to time it. We all do. We all time the markets, and that's what we're going to look at here with the Forex market, and also how we use VPA, but also how the quantum tools that we have developed will also help you as well. And of course, everything is against the landscape of the fundamental and related markets, and everything, all the concepts, all the knowledge, the sort of background information you need to attack this market is all contained now in what we call the Forex Trading Library, which is available up on Amazon and is $9.99. And this is a nice slide from our education program where we've kind of pulled everything together and added some, which is basically also explaining that all these markets are interrelated. Forex very much sits at the center of the capital markets. As you see, we've got bonds, equities, and commodities, but they all interact. We have to have knowledge of how to do what we call cross-market analysis. So we know, what is happening in bonds will impact what is happening on certain currencies, what are the equities doing, what are commodities doing, etc., etc. It all sounds terribly complicated and a bit overwhelming, but I can assure you, once you start to tease it apart, it is actually fairly straightforward. As we always say, if you know the questions to ask, you will get the correct answers. So before we carry on, let me just pass over to David.
Hi everybody, sorry about that. I couldn't find my my chat box, so apologies. Very warm welcome from me. Good to have you with us today, and wherever you are in the world, I hope it's a little bit nicer than it is here in Hampshire. It's grey and mizzling rain and cold, and believe it or not, we had snow yesterday here as well, which is not unusual, but certainly uncommon at any rate. So hope it's warmer where you are. If this is your first time, very warm welcome to you. Good to have you on board. And if you're coming along regularly, I can see we've got quite a few regulars in the room as well. Warm welcome to you too. If you have any questions, then please just drop them in the chat box. We are happy to answer them there for you. If they're longer questions that need a longer answer, more detailed answer, then we'll answer it on air for you. Just to highlight the platform we focus on here is primarily MT5, MT4 or MT5, but I've also got the NinjaTrader platform running on my side. So we do flip-flop between the two and look at the various charts and what's going on in the Forex world as in live real time. Anna's got the currency dashboard up there, which is, it's a bundled, we call it the currency dashboard because that's really what it is. And the way the indicators are laid out in that frame is very much the way we apply them in terms of the process of identifying opportunities, looking at the aspect of that particular pair that we might be considering, and moving through those four indicators in the dashboard. The first is the currency strength indicator, always the starting point because it reveals strength, weakness, overbought, oversold for the building blocks of the Forex world, the individual currencies. In other words, we've disassembled it. We've broken this complex market out from the pairs into the single entities of a currency. From there, you then start rebuilding. You look at a currency pair which might be of interest. For example, in this still, you've got the pound there, the yellow line, which is selling off quite strongly. And you might look at pairing that up, for example, with the New Zealand dollar, which is the grey one at the bottom there, very oversold. The Aussie, the blue line, that's rising quite nicely. That might be an opportunity. You've also got very strong buying in the Canadian dollar, which is the purple line, rising strongly and already crossed on the pound, and also the Swiss franc. So you'll be looking at all those opportunities. You then go to the currency matrix to see how that shapes up in your time frame in terms of whether that individual buying or selling of a currency is reflected across the complex in terms of universal buying and selling of that currency and where it ranks in that ladder. The biggest danger that most Forex traders are unaware of is the fact that looking at a single chart in isolation will tell you what is going on with that particular pair, but that particular pair may be moving in a completely different direction to the broad sentiment of the market. There's lots of different reasons for that. Could be news, could be local politics, could be anything. And if you're trading in isolation, that's fine, as long as you appreciate that you are trading against the broad market flow for that particular currency. You'll see it in all time frames where a particular currency is either being bought or sold very strongly against one currency, but that is not often the market sentiment broadly. The currency array then really breaks that down further into the pairs. It reveals strength of trend, momentum in the pairs. It also reveals that market sentiment again, where you're seeing broad market sentiment across the complex, or whether that's in agreement or disagreement. It also brings in another element to the aspect of overbought and oversold for currencies, whereby on the ranking ladder alongside the ladder itself, that will also flash up when currency pairs are approaching or have reached potentially overbought or oversold situations. And finally, over onto the currency heat map, which is it pulls all the information together in the sense that you're looking at a huge number of different time frames in one indicator. So you're seeing on the sales, at any rate, you're seeing changes from bearish sentiment to bullish sentiment in terms of changes in color from red to green. It also gives you a sense of whether that sentiment is moving out from the fastest time frame, because that's where everything starts, is on the fastest time frame. In this case, it's the 1 minute. So if you're seeing sentiment change on the 1 minute, then you see a sell change from maybe green to red on the 5 minute, and then that ripples through to the 10 minute. That tells you that the sentiment is changing and moving up from the faster time frames and starting to ripple through to the slower time frames. In other words, there's been a change in sentiment, and that change in sentiment is real and has strength because it's moving through the sales. On the left-hand side, that is a different aspect of that information, which is basically weighting the changes in sentiment and ranking the pairs accordingly. And as you would appreciate, the slower time frames in this case will have much greater weighting than a faster time frame, because a 1 minute change in sentiment is not going to have as much weight in the market as a change in sentiment in a 15-minute or an hourly time frame, and so on and so forth. So the pairs in the ranking ladder here will move less slowly, but nevertheless will give you a sense over hours and even over days of which particular pairs are reaching extremes on the ranking ladder in terms of overbought and oversold. It will also reveal the sentiment for those pairs, because if they're all stacked at the bottom or all stacked at the top, it's giving you a strong clue that those pairs, the sentiment is very much overbought or oversold across the market for that particular currency. And thereafter they will start to move, but they won't move at the same speed as those on the matrix, or indeed those on the currency array, purely because they are weighted. And that's what we wanted to do, to develop the currency heat map into two distinct aspects: an intraday tool and perhaps a longer term tool, if you like, although not. The pairs in the matrix do move up and down in the day, obviously, but they're not going to go from the top of the ladder to the bottom of the ladder, which certainly happens on the matrix and the ray on the fast time frames. They will move at a more even, leisurely pace. Nevertheless, they will move. So it's two different aspects of the currency world combined on the heat map, which gives you a global view of what is going on across the complete Forex world, and just contained on one chart. So it does away to a great extent in terms of trying to have multiple monitors over. You can just look at that and it'll give you an instant snapshot of what is going on in sentiment as it ripples across the market. I'm going to pass back to Anna, so we'll get over to some live charts.
Just quickly, just to have a look at what's been coming through in the news, as it were. Why have I got that one? I've got the wrong date up there. I haven't refreshed it. There we are. All right. If there's been quite a lot of volatility actually, and ironically, it's from a piece of news which isn't classified as what's called Tier 1. Those of you who use a Forex Factory will know that this is like a traffic light system. So red is a high impact, orange is medium, and this is actually a low impact, which is yellow. But it's fundamental news. Just to recap on this, this system is really useful, and it's not, it's a good way of looking at the calendar and thinking, oh yeah, I've got a high impact event coming, because it's in red. Sometimes and then we sort of ignore these two other colours, and certainly in the yellow, that would be the one that have the least impact. But in fact, this is the one that's caused the volatility that we've seen. That we certainly saw it at 7 o'clock this morning. Yeah, because we had that's when we started, and it's German factory orders, and they come in at minus 4.2. And you think, well, why was the volatility caused by a night of news which under normal circumstances the market would consider to be low impact? And there's a number of reasons for that. Whilst this system, this classification system, is useful because it gives us a heads up of what is likely to affect maybe a position that we've got in the market, or we're thinking of getting into a position. Again, timing, you have to factor in, especially if you're a short-term trader, are there some news items coming ahead that, are you going to wait, or are you just going to look at the chart, look at the setup, and hope that the setup will actually play out? Tomorrow is a classic example with NFP. Fundamental news is also, you have to read it also in terms of the business cycle and the economic cycle. In other words, you have to place it in a much broader landscape. And at the moment, as you know, given what is going on in the broader the global economy, you have this thing with China and the US. The data that's been coming in is certainly over the last quarter. It's all looking a little bit fragile, and with Germany being a huge exporter nation, that is where they, you know, that is what they are known for. In fact, they run a huge surplus. They're like the Chinese. Anything that is, you know, any data that comes up and shows that their export market is in trouble is going to, you know, is going to impact the market, even though this release has been designated, you know, third tier, as it were, because of where it appears in the economic and business cycle. So, as I said, it's a little bit more, you have to read this data in a little bit more of a nuanced way. First way you read it is you think, yeah, you're aware of it. And I have to say, for most traders looking at that this morning, they would have said, oh yeah, but that's only tier 3. I'm only a short-term trader. The market's really not going to pay much attention to it. But in fact, the market has paid an awful lot of attention to it. And those of you who have our tools on your charts will soon realize, will have noticed the volatility candles that were triggered on the release of the news. And in fact, the pair that I've been looking at, where it was, well, it's across all the euros and the pound pairs, but it's actually euro pound, because euro pound, not only has it now was it impacted by the by the release, but also it's impacted with by Brexit. Now, timing. But the last thing I was going to say about, there's lots of elements of time and timing that I want to mention, but one of them is also time zones, and understanding that, you know, the time zones for this market are not equal. It is a 24-hour market, but the liquidity, the participation levels are very, very different, and if you're not aware of that, that can also have an impact on your trading. Now, what's happened here? What do we have here? Let's look at the CSI, because the CSI is, if you want the use of a better word, a timing tool, in the sense that it tells you when an individual currency has reached a point where the time may have come that it is going to reverse. And certainly this is the 5-minute one, and we can see here the pound was reaching a point of being overbought. In fact, the pair, the other currency with which it was, you know, possibly another candidate other than the euro pound was the Canadian dollar. Now, the Canadian dollar, I'm also going to keep an eye on, because it's a currency that is very much comes to the fore once the North American session opens, and it's also a currency that is tied to oil. But what's interesting here, that it's actually been quite heavily sold, and the pound has, at this point here, we can see was being bought. Then we had the impact of the news. With the pound, it then sold off, and we have here, this is the euro. So I was looking at the euro pound in terms of timing, and the reaction that we see here, this is the volatility that was caused by that news announcement. Prior to that, as I said, this is the Asian session. We have sideways consolidation, which is what you expect, because in currencies are also impacted by, I said, we call it local news, but traders are more likely to trade their local currency rather than a currency pair that is more heavily traded in something like the London and Europe session, and euro pound would certainly fit that bill. So this cross pair here, lots of consolidation. Then we had this breakaway into, because it was a reaction to the news. I'm also conscious that we're 10 minutes away from London, where we're actually going to get another reaction. And as a trader, what you have to be aware of is these pockets of time in this 24-hour session, and it is possible on a short-term basis to trade them. There's absolutely nothing, you know, wrong with saying, okay, I'm on the 3-minute chart, maybe I have a Renko chart that I here, I see a setup, but I have to be aware that from a time perspective, I won't be in this trade, in this move for very, very long. Now, how that actually was reflected on the Renko. Now, my Renko here that I've set up, let me just find the actual Renko chart with this indicator. Again, it's another timing tool because it's a very precise tool to help us with entries, exits, but also to help us keep us in, because it smooths out all the volatility. Because with a Renko, time isn't involved, it is purely based on price. And I'm actually using the ATR version of this indicator. It has, you can use it in two ways. You can either let the indicator come up with the value of the box size based on average true range, and here it's 1.53 pips. So every time 1.53 pips goes through the market, a brick will post, or you can set the value yourself. But I've left it to the ATR value simply because there is so much volatility in this pair at the moment, and we know why the volatility has been triggered. And what's interesting is here, what we have in this pair is what we have a trend, but it's a trend with volatility. This is something we talk about and we explain in the program that David and I have put together. You know, trends are not created equal. You will have a trend with volatility, as we have here, or you can have a nice smooth trend where you see higher highs, higher lows, or lower lows and lower highs. And understanding the type of move that that you are in or potentially looking to move into will also determine how risky, if you like, that move is likely to be. And certainly a trend with volatility, pound yen is classic on as a pair. It's a very volatile pair. You get trends, but they are very volatile trends. You will get a lot of whipsaw action, but the trend will, once you look back on it and you put your lines on it and you kind of ignore the volatility, say, oh yeah, well that was a nice move from from where we are, from here to where we are here at the moment. And because the way our brains work, we forget all this, this sideways, this choppiness and what have you, which is another reason why we have created these indicators in the quantum tool set to try and, first of all, understand what is going on. Secondly, give us these timing tools and use them as efficiently as possible, but also to try and help, if you like, calm our brains, because the one thing we have to face more than anything when we are traders, we have to face ourselves. It's our emotional reaction to what we are seeing on the charts. And staying in a move, the longer you stay in a move will partly also come down to temperament. A lot of traders just cannot sit in certainly wouldn't be able to sit in a move that looks like that, because if it's volatility, pullback, and then come down again, and that looks huge, doesn't it? But when you actually look at it, the actual pip value is not an awful lot. But the emotion that would go, that is triggered when you see this kind of candle configuration, it's pretty hard to try and manage, and that's what we have to try and do. We have to manage this, and the way David and I do this is, as I said, we have our tools such as the CSI, which at least highlights the best candidates to trade, and then we have developed these other indicators to help us with timing a potential entry, but more importantly, helping us to stay in this trade. And as I said, we've got 5 minutes to go to the London Open. As I said, the general topic of time has to also include an appreciation of how things can simply turn around 180 degrees at the start of the London session. And I'm sure you've all come across this yourself. Now, what we've also done with the pound, the British pound, those of you who have our packet, who have the full package will know we now have a pound index to join the dollar index, the euro index, and the yen index. And what all this does, it helps to just confirm whether we are seeing strong buying in the British pound. This is the 30-minute chart. I'm just going to change the time on this one. Let's move that to 5 minutes and see what happens here. Yeah, this is what we can see. This is you can see the strong moves in the pound. Then we have a little sell-off, and we'll see what that happens as the London session gets underway. David, is there anything you want to say to that? I just want to move that over. And I will keep an eye on the euro pound as we transition into the London session, or not transition into the London session. In fact, the London traders actually come on board. Do you want to move over to you, or do you want to see this chart?
Yeah, you can move over to me.
Move to it.
Just going to switch screens across to Ninja. Just pull that up. I've been on the Euro New Zealand while Anna's been on the Euro Pound. I've been had the Euro New Zealand up. Hopefully you can see my screens. Hopefully you can hear me as well, because we didn't test the microphones before. Anna put a thumb in the air, so hopefully that's good. This is a different arrangement, but multiple time frames. I've got the 3 minute at the top, I've got the 5 and the 10 minute across the top here. Down on the bottom, I've got the slower time frames. I've got the 30 minute, I've got the Renko here for this pair, and also the daily chart down in the bottom right. Just pull that up a little bit. So as I say, this is the one I've been following. What's interesting about it is, well, several aspects. First of all, what Anna was saying about timing and also helping you to stay in. Again, if I pull up the 3 minute, the indicator that probably helps more than anything else, and it was the single reason we developed it, it's really this indicator at the bottom here, the trend monitor, because you saw on the Renko with the trend dots, they transition quite quickly because they're close to the price action. But what the trend monitor does, it takes a more considered view of price action. And so when you see these sort of moves, which are expected anyway, because you had the volatility candle triggered here, heavy selling coming in on the volume here, and you're expecting this to, at the very least, retrace into the spread of the candle, which it's done. We've also got the volume point of control here, this yellow line, and a ton of volume sitting there, which is what you expect to see. And in addition to that, just bringing another facet, you've also got these levels of price-based resistance. You've got the red dash line here and the blue one here, and the thicker the line, then the greater the number of times that area has been tested. So when you're looking at this, you're seeing the volatility, so you're expecting some sort of congestion to follow, trading within the range of the candle, because that's what it does. It's looking at average true range. And when the price action moves outside of average true range, as it did over here on the upside, market consolidates and then starts to break away. Once it starts to break away, that's fine. It's just confirming the sentiment of this particular candle. And we've got the same here. And then once the market starts to rally a little bit, you bring in other aspects. You've got resistance in here. You've got price resistance. So when the price action reaches that level, you are expecting possibly the market to pause, possibly enough to cause it to continue in its trend, or if there's strong volume coming in down here, to actually break through these levels. Then we're down to the volume point of control. So there's lots of reasons around here why we're expecting the market to pause, have some congestion phase. And what the trend monitor does is it helps to keep you in. It helps to calm that emotion that is always the response when you've got into a strong position and then that position starts to unwind against you, because you've mentally banked whatever it was you had there in terms of positive, and it starts to dwindle away. And then, of course, you bring it in terms of multiple time frames. So what we're seeing now is we're seeing this negative sentiment towards the euro reflected here on the trend monitors, bright red, up onto the 5 minute, same sort of thing, similar sort of price action. And remember also, in terms of when we're looking at volume and price analysis, this is 7 o'clock our time. So this is when Europe gets underway. So everything prior to this is Far Eastern Asia. And when we're comparing volume, we can now look at this segment here, because we've got an hour of trading in here. We're now looking at the London Open, and as always with the London Open, there is potential for a reversal to take place once again. But at the moment we have a strong trend monitor, bright red here on the 5, bright red here on the 10. No transition on the 30 yet. You wouldn't expect it because it's too far away from the price action. But if that ultimately does become a longer term shift in trend, then of course you'll start to see it develop here. What was interesting about this price action here, and bear in mind, this is middle of the night for us, so this is Far Eastern Asia, all of this is Far Eastern Asia, right the way through to here. What was interesting about this rally here, we've got a pretty strong rally, but look at the volume. The volume here is falling away. It's pretty thin. And you can actually compare that with what was going on overnight into these areas here. You would expect to see this is the middle of the night, this is Far East Asia. But certainly in terms of this rally that occurred early morning our time, you're seeing, in fact, if I pull that up a little bit, just to make it a little bit clearer, just pull that up there. What you're seeing here is a pretty strong rally, but the volume is not in agreement. It's falling away. So you've got rising price, falling volume. So that alone is giving you a heads up that potentially this is looking at weakness, possibly a reversal. You would have known the news was coming up. That's what you would have been looking out for. And then you start to put it all together. What we're seeing in the 30-minute as well, which is quite interesting, we've got the volume point of control here. We've also got some very strong price support in place below in this platform, this blue dash line. And that is purely based on price. This is exactly the same concept, if you will, as for the support and resistance indicator on the MT4, MT5 platform. It is based on price. It is looking at the number of times an area of price has been tested and retested. On the MT4, MT5, we deliver it either as dashed lines or solid lines. So the solid lines are much stronger levels. On the NinjaTrader side, we deliver it as thicker dash lines. So where you've got thinner levels like here, this has only been tested once. When we come down to this level here, which is much deeper, much wider, it's been tested repeatedly. And you can see it across here, how often this level has been tested. It's very, very strong. So if you're trading this as an intraday scalping trader, and perhaps we get down to this level, you need to be aware of that fact because it's giving you another piece of the puzzle in the jigsaw. Because if the price does get down here, you're short maybe, and you get to this region, at the very least, you're not going to be surprised if the market starts to reverse off that level, because the 30-minute support region will always trump anything on a faster time frame. In other words, a strong level here will carry much greater weight than a strong level on a 3-minute or a 5-minute time frame, and that's another reason for using multiple time frames. Okay, we're moving into London. We can see we're starting to see a pickup in volume here. What we're also starting to see, we've got this hammer candle form. We've got some actually quite strong buying coming in under this particular candle here on the 3-minute. So it's not going to be a surprise if we see a minor reversal develop off that. It may only be minor. It may just reflect the fact we've moved into London, and the longer trend, the weight of sentiment towards the euro may well continue to press the market lower. Finally, moving down across onto the daily chart, just to pull that one up. Again, it gives you another sense of where we are in the trading range. You can see here on the daily, we had this big volatility candle several days ago. We're still trading in that range. Volume point of control is sat here. We've got an absolute ton of price resistance overhead, this red dash line. We've got another level up here. So there's a lot of reasons to expect this market to congest around this point for the time being. That is not to say there are not opportunities to trade intraday. There are, of course there are, you've seen them. But nevertheless, it just gives you a sense of where you are in terms of the longer term picture, even as an intraday trader. One other chart that is very interesting at the moment. Can I just flick over to the Aussie yen? Yep. Oh, sorry, I'll do it on here. Let me just change this over to the Aussie yen. I'll just show you that on the daily because it's certainly one that's caught our eye. Just wait for that to load up. Just pop that up full size. There we go. That's the Aussie yen on the daily. I'm sure you've seen it. This is the start of the year. So for the last 3 months, this pair has been trading in this extreme congestion range between just below 78 and really 79.50, I guess, is the ceiling. You can see the strength of this platform that is building here. It's absolutely enormous. And that as a currency pair for longer term trading, once that breaks away from that range, and it will, it has to, they always do, then that will be a massive platform either of support or resistance to a breakaway trade, and I'm talking longer term here because we're on the daily chart. But once that pair breaks away from that particular range, it will develop, and it should develop, a strong trend, of course associated with volume, if that confirms the move away. And I just wanted to show you that because it's also indicative of when pairs get range bound. Yes, there are opportunities in here, but boy, oh boy, it's a tough pair to trade at the moment in terms of anything longer than 5, 10, 15 minutes, intraday. If you're looking at it on an hourly or 4 hourly, it's really, really hard trading on that one at the moment. There are plenty of better opportunities around the market than the Aussie yen right now. But once it moves, it will move and a strong trend will develop thereafter. I'm going to pass back to Anna.
You see, like David tells me you can see my screen. I just want to go back to the 3-minute chart that we were looking at when we had all this volatility come in. And I'm not, as you can see here, this is the volatility indicator that was triggered. It triggers in real time. These, I've got them as little purple dots on some. You've got little arrows on yours on MT4. It's a little, and what about on Ninja? Is it an arrow as well? You've got little triangles. Yeah, you've got little triangles. I've got little dots on the MT5. And from a VPA perspective, when we were looking at, we were looking at the, as I said, this was a trend with volatility, as we can see here on the, wrong one, on the Renko. As I said, that is a trend, but it's a trend with volatility because you have a lot of pullbacks, corrections, bit of sideways, and then it carries on down, and it's the emotion that is triggered in you when you are sitting in such a move. But if we then apply not just the indicators, but you look at it from the perspective of volume price analysis. Yes, you had this sharp move lower. Yes, you had the volatility triggered. You can see here you've got down candles, you've got a rising volume, rising in the selling. When this triggers, the reaction we know is you are going to get a retrace to within the spread of the candle. You always have it here, as you can see here on this second volatility candle, but it did actually carry on lower. But eventually it will retrace and it will stop there, and it will either congest or it will actually reverse from that volatility. Now look at the volume underneath there. Yes, there was buying volume coming in here, but look at the next up candle. Look at the volume underneath it. Certainly not as much as that. So if you were just using VPA to look at this move, this is not going to go much further. Then we had another bout of volatility, not accompanied with a lot of volume, but we know it's volatility because that candle is outside its average true range because of the little purple dots. Then we had a classic reaction when this happens is you have a retrace to within the spread of the candle. Again, not a lot of volume under that selling candle, but it didn't go very far. But look at these 3 candles. These are quite interesting. You have not a lot of volume under that one. Then you have this anomaly. You have this big up candle here. Look at the volume underneath it. Then you have this candle, which is not as big as this one, a little bit more volume. But these are the kind of anomalies that VPA highlight for you and confirm, validate whether the move that you are seeing is actually genuine or not. Because that's what VPA does. It either confirms, validates a move, or it tells you this is actually a fake move, as it were. So that's that's how you would read the volume and the price in this type of price action, as I said. And then we had the continuation of the downward move. Although, as I said, you do have these wicks to the bottom of the candles. Yes, there was buying coming in, buying support coming in, but in fact it did carry on. And what you then look for in terms of if it's going to carry on in the original direction is you look for the lows of the volatility candles. Once those are taken out, you know they are going to carry on lower. Then we hit on, you know, we had to confront the London Open, and as I said, this is understanding time in the context of the time zones. So you have a lovely setup, you have a nice move developing, and you bump up against, as I said, the crossover session. And you know, I wouldn't say, I think you could possibly say all bets are off, David. Do you not think so? It doesn't always happen immediately. You have a reversal. Sometimes as it's done here, it goes sideways for a bit, but it looks like now we do have a reversal, perhaps a genuine reversal on the horizon, and we can see that because we've got this really lovely deep hammer candle here with nice volume underneath it, and we look as though we are moving higher. What's interesting also is over on the Renko, which thus far had kept us in this trend, albeit a trend with volatility. This is the first time we are seeing a transition into from the bright red into this not bright blue, this in between color, as it were. And really, you have to wait for a full transition to, as I said, this bright blue. It may happen. We have exactly the same here. It goes up and then it reverses lower. The trend dots, we only got one blue trend dot at the moment. So again, it's a case of waiting and being patient. And what I've also done is, as I said, we also have this is the pound index that we have here, but we also have a euro index. So you'd have the indices as well up to give you some kind of idea of whether this move has got some momentum behind it. Let's look at the 3-minute chart here. It looks like it's going up. I know it's got, got spikes to the top and the bottom of the candles, but it looks like it wants to move higher. Multiple time frames. Sorry, just one more thing and I'll pass over to David. Now, what's interesting here is this is the 10-minute chart. We can see here there was actually go back to the volatility. This volatility candle on the down candle, we had the retrace in it. In fact, we had a bounce, quite a strong bounce from it. That also triggered a volatility, the volatility indicator, and now we're actually back within the spread of this candle. So it went back into the spread of the candle, and it looks as though it wants to move higher. What it has to do is has to close above the highs of these two candles. Right, David, do you want to say something on this one? Yeah, I'll pass back to David. Have you got something interesting over there? So I will keep. Okay, tell myself what.
Just changing back over to NinjaTrader just very quickly. You should be seeing my screen any minute now. Got the CSI up there. Just to highlight what's going on in terms of the CSI, because it really does paint an interesting picture. This is on the 5-minute. And really what you're seeing in terms of that move on euro pound is it's being driven asymmetrically. In other words, it's being driven purely by selling in the British pound. This yellow line, that is what you're witnessing right now, because what you're not seeing in terms of that move developing, you're not seeing the euro, buying in the euro, which you would expect to see if you're seeing a strong trend develop, where this is rising very strongly and the pound is selling off very strongly. You're not seeing that. And hence, the strength of that trend is not going to be as strong as some of these other candidates. So there are much better pairs to trade rather than the euro pound right now, purely because you're not seeing buying of the euro. And if I flip over onto the 15-minute, there you go. What you've got very strong selling in the euro still, and you've got this selling of the British pound coming in. So when you've got the two currency pairs moving together, then the strength of that trend is not going to be as strong as if you look at some of these other opportunities. Strong selling in the euro, we've got strong buying in the New Zealand dollar, we've got strong buying in the Aussie, we've got the yen looking as though it's starting to kick up. And if you go back to the 5-minute, there we go. What are the opportunities there? Well, in terms of the euro, you might not be looking at that. You might be looking at that as a reversal now. It's gone to oversold and possibly kicking up as a reversal off the buying that's come in, certainly on the faster time frames. So it's all about using all the tools. If you go over to the currency array, I've isolated out what is going on in terms of the euro itself, and really just going back to look at it. When you look at that, you think, oh, euro pound, it's a good opportunity. But what's actually driving it is that pound sentiment. It's not the euro sentiment that's driving it so much. And that's key to understanding as to which pairs to focus on, which are going to deliver the best opportunities, and whether also the sentiment towards that particular pair is universal. As you can see here on the array, the euro is not being sold universally. It's actually being bought against the Canadian dollar for the time being. So if all things being equal, if the sentiment is universal, then you would expect that to be down here. Maybe in the fullness of time, this is a 10-minute time frame we're looking at here, this will actually move down to join all the other pairs, and then sentiment will be universal across the piece for the euro at any rate. And then it's a question of teasing out which particular pair is the best opportunity, and is it being driven on both sides of the equation. So I just wanted to highlight that. Let's have a quick look back at the Euro New Zealand, which I've flashed up again. Just go back over there very quickly, drop that out the way. You can see there is buying coming in here. If we go up to the 10-minute, you can see it here. This is London Open at 8 o'clock, so we've got 20 minutes of price action here. There's a lot of volume under that candle. Some buying coming in there, further reinforced here. Looks as though we've got more buying coming in here as well, depending on how that candle finishes and on the volume profile. But for sure there is some volume coming in, and certainly some heavy buying coming in around that particular time horizon. And that, of course, will be reflected on the CSI, and then you'll be looking at the currency matrix, the currency array, and the heat map for confirmation of that, and off you go. So just wanted to highlight all that. I'm going to pass back to Anna because we're getting close to time.
And that's just actually that's actually what David has explained there has actually played out on the euro pound, where as he said, because it was there isn't a strong divergence between these two currencies. And if we look back at the Renko, and I said here we'd only had one trend dot, we hadn't had a clear move into a bright blue. So that was also, was it just another example of this trend lower, but with volatility coming into the trend. What's also interesting here, you had, as I said, you had this nice hammer candle, which you got a reasonable amount of volume underneath it, and fine, it certainly pushed it higher. But look at these two candles, just regular sort of candle analysis where you have candles with wicks, deep wicks to the tops of the candles. That is going to tell you that there is selling there in that candle, and in fact it may be that this trend is going to continue lower, albeit with an awful lot of volatility. And what we're trying to show here as well is markets, you're always going to get bouts of volatility. In fact, we need volatility. If markets, if something isn't going anywhere and is stuck in a long-term congestion, David showed you the Aussie yen, that has possibly been the most painful pair to try and take a trade in. And if it's one of the pairs that you've perhaps been, looking at as an opportunity, I think someone wrote on Forex Live, one of the sites that we sort of dip into just to sort of catch up with the sort of background news, as it were. I think it was Adam there who highlighted it, and he said I think he'd ever seen a pair, as it's 3 months, David, stuck within such a narrow range. Ranges do get broken, support gets broken, resistance get broken, and the only thing you can say about congestion is the stronger those regions that are built over a period of time, when you do get a breakout, then the stronger that is likely to be. Wyckoff's second law, isn't it, David? Cause and effect. And those of you who are on the program will know exactly what I am saying. So the euro pound is just a nice example of a trend with volatility, that if you understand volatility and you you understand what is happening in terms of price action when this this agitation, the market is agitated. Volatility is agitation, and it's the compression of time. Things happen very, very quickly. Normally they would take, nice and measured and even, and it just happens very, very quickly. And if you can have an indicator such as a volatility indicator, first of all, that it triggers in real time, so you're going to be hit by a period of a period of agitation, you know what to do and what to expect. And you could actually use it saying, I'm out, I'm in there, I've been hit by volatility, I don't want to sit in there, my temperament is such that I can't take the emotional highs and lows that you get when volatility hits the market. I'm going to sit it out and I'm going to wait for another opportunity, and and they will come along. But you can also leverage it, and you can also, as I said, volatility can be your worst enemy, but you can also make it your bestest of friends. Right, anything else you want to say to that, David? I think there's a question. Is a question here? Right, fine, it's just Alex had to go. That's brilliant. Fine, I think, is there anything else you want to say on that, please? As I said earlier, we will be back later on for the start of the New York session, and certainly the one of the currencies we'll be looking at is the Canadian dollar, given, as I said, you have to kind of look ahead. Certainly trade what is happening in this session, but you also have to be mindful that look at the currencies that are, where are they positioned in this session, and is there going to get a reaction there as we come to, say, the New York session? And certainly the Canadian is one of those. Is there Canadian news that possibly is going to affect it as well? So, as I said, lots and lots of things to consider when you decide to enter this market. Now, very, very quickly, I know we've had some new people here. Those of you who may not have come across our indicators before, the details you can find on Quantum Trading Limited, quantumtrading.com. What am I talking about? It says this is the early start. I can't cope. Let's have a look. That's not the front page. That's the Ninja Trader page for the indicators. There we are. Here we are. That's the front page. As you can see, MT45 Ninja, and we also have them for Trading View now. Not the full set for Trading View because of the script that they use. That allows us to write indicators is not the same, so not being able to port all the indicators over, but there's the CSI over there, and quite a number of the others. And the nice thing about TradingView, if you are a fan, is that it does actually run on a Mac and actually on your phone as well. Underneath here all the individual indicators. Let's have a look at the volatility. Just click on the actual indicator itself, and it takes you to the support page for that indicator with videos and as I said, written explanations of how we developed it, how you would use it. David has done a whole bunch of videos to explain how you can use it in your trading. I mentioned the Forex trading program. And this is at Quantum Trading Education. It is a complete, self-directed program with these 5 modules: psychology, fundamental, relational, technical analysis, very much based on volume price analysis, the principles and concepts outlined. We're built on the concepts of Richard Wyckoff. And then we have a module called the mechanics of trading. The program includes all these modules, all the videos, the PDF downloads, but it includes the full package of indicators, not just the Forex ones. It's all the indicators. And with regard to the indicators, the way we operate is you can buy one indicator, you can buy a bundle of indicators, or you can buy the full package. If you buy the full package, any indicator that we develop in the future will be automatically added to your package. So, for example, if you have if you have MT4 now, the pound index, which we've been developing, you will have access to that. You don't actually have to pay us for that indicator. Anything else you want to say, David? That's it. We are back at can you remind me? 1:45. Yeah, 12:45. 1:45, and we'll be looking at, as I said, picking up from where we left off this morning. seeing what is likely to happen in the afternoon session, and it's just Ninja Trader. This session is for MT4. I think you're using Trading View though, aren't you, at lunchtime? Yeah, and actually we'll look at Trading View as well. So hope you can come along. If not, we are back next Thursday at the same time. Hope you enjoyed it. If you have any questions, you can drop me a line, anna@annacoulling.com or david@quantumtrading.com. So have a great day's trading. It's certainly fun at the moment, a bit volatile, but hey, it wouldn't be half as fun. Take care, and we'll catch you next time.